I'm Caroline Hyde. This is Bloomberg Technology. Coming up, T-Mobile out with another subscriber win. CEO John Legere joins us to break down the company's first quarter numbers and a roadmap for the year. Plus, Ginny Rometty's $33 million pay package dragged under the spotlight. Why some are seeing red over the way Big Blue calculates CEO pay. And Larry Page's flying car dream prepares for takeoff and could come as early as next year. First to our lead, it was green across the globe Monday as stocks kicked off the week with gains. Sunday's vote in France triggered a relief rally in global equities that made all its way across the US, with the Nasdaq closing at a record high. Bloomberg News stocks reporter Abigail Doolittle joins us now from New York to dig into what this means for technology. What a day, Abigail. Markets, tell us about the wrap-up.
Absolutely, Caroline. Risk on. That really describes what we saw today. We had the three major averages in full rally mode. The Dow, S&P 500, and the Nasdaq all finished higher by more than 1%. Each index having its best day since March 1st. The Dow and the S&P 500 are now at levels seen back in the middle of March, while the Nasdaq, as you mentioned, yet another record high. So lots of bullish activity. But the record highs for both the S&P 500 and the Dow back at the beginning of March. So the question is, can this last? Let's hop into the Bloomberg and take a look at the chart of the Nasdaq that may have some clues here. This is #BTV 8030. It's a one-year chart of the Nasdaq. And today's record high came on a big gap to the upside. Now, the thing about gaps, Caroline, they typically represent frenzied, emotional, frothy activity, trading activity, lots of emotion on the part of investors. They typically tend to fill, whether they're to the downside or the upside. Now, this is an upside gap, suggesting that if it fills, we could see the Nasdaq drop back down. And in fact, all of the gaps to the upside over the last year, boxed in orange, those have filled, with the exception of the one in the aqua box. Plus, that in that shape in purple, that broadening formation, typically those are bearish. It represents massive uncertainty, not a lot of information on the part of investors. And the wider the swings get, the more bearish it becomes. Typically, it tends to break to the downside. But let's return to the bullish activity that we did have today behind those big gains for the Nasdaq. All of the big tech names, including Apple, Microsoft, Alphabet, and Facebook. These are some of the higher beta names. They tend to react bigger to some of the macro events such as we're seeing today. Plus, Microsoft and Alphabet, they report this week. So perhaps this is a bullish tell on what could be ahead for those March quarter reports later this week, Caroline.
Yeah, and we're going to be digging into earnings in just a moment. Tell us a little bit about Microsoft and Alphabet. Do you think there's much push going for their stocks because of the optimism on these numbers?
Well, you know, Caroline, we have a very interesting chart on Microsoft, and I'll pull it up here on the Bloomberg. This is #BTV 8031, and there was a great article on the Bloomberg pointing out the fact that the call volume today on Microsoft is well above the 20-day moving average. We don't have that in here, but in orange we do have the call volume. You can see it spiking higher today. In blue, we have the put volume, so there's some hedging activity going on. But despite the fact that the volume for both sides of the equation, the options market, is spiking today, look at that white area boxed in. That was on the last report. So relative to expectations going into that report, this is relatively small. So it's going to be interesting to see, of course, how it plays out. Another big winner on the day, Xilinx. The chip stock absolutely surged. We have a great view of this stock surging on the day after Credit Suisse did upgrade shares of Xilinx, the chip maker, to an outperform. They set a $70 price target, suggesting more than 15% upside could be possible. And then lastly, the chip sector. If we hop back into the Bloomberg, this is #BTV 4265. There's the stocks over the last year. Big dip down over the last couple of weeks below that 50-day moving average, but back above it. So it's going to be interesting to see whether or not this traction, whether the chip stocks can hang on to this traction, or if that gap we saw on the Nasdaq perhaps suggests that there's going to be some sort of reversal and volatility ahead. Time will tell, Caroline.
Is it emotional? Is it frenzied? Is it here to stay? Thank you for brilliant reporting as ever. Abigail Doolittle live from New York for us. Well, meantime, Amazon shares edging up today. Two analysts raised price targets for the everything store. Heath Terry from Goldman Sachs and Michael Prachter of Wedbush both project the stock to jump over $1,000. That's joining, well, more than double digits who think it could be above $1,000 now. Now, this comes as a slew of tech companies are getting set to release their quarterly earnings. Twitter comes on Wednesday, followed by Alphabet, Amazon, Microsoft, and Intel on Thursday. Joining us is Jitendra Warrell of Bloomberg Intelligence to break it all down for us. I'm going to start with Amazon because I'm looking at one of my favourite functions. It's got to be analyst recommendations, of which you are an analyst. Analyst recommendations, I'm looking at the price target in the yellow, creeping almost above $1,000 as a consensus price target now for Amazon. There is plenty of green, meaning many a buy, yellow meaning hold. There is not one sell on Amazon stock. Why the bullishness?
So if you look at the different businesses, cloud momentum continues. The demand is strong there. The margins are pretty healthy. It's holding the profit line of the equation. And on the retail side of things, the end market demand is strong, but more importantly, Amazon's fulfillment by Amazon program, it's on fire. They have grown their FBA sellers by 70% last year, and they're seeing increased momentum because what happens is this fulfillment by Amazon sellers, they can sell directly to Prime. Prime members get more selection, and hence the story continues. Now, what it does have a downside on this FBA growth that they have seen is on the cost side of the equation, because it puts a near-term cost pressure on the company as they increase the investments. So the growth trajectory is very strong. It's just the cost volatility that we have come to sort of gotten used to with Amazon in a lot of ways. That is not going away.
Yeah, certainly some of the raised expectations of this seems to be on the amount that they continue to spend, and that does eventually filter into revenues picking up, but we're always promised perhaps a little bit of jam tomorrow and not today when it comes to Amazon. I'm digging into, you mentioned cloud. We've got Microsoft, we've got Alphabet coming this week as well. Big cloud players here. EM function gives us earnings estimates, really looking forward to Microsoft. I've got it on at the moment. I'm looking at the revenue. $23.6 billion is how we're expecting their fiscal third quarter to go. That's an uptick of 7%. How much of that is based on cloud euphoria as well?
It's all about that. Like if you look at Microsoft and Google as well, like if you look at Google other revenue and the growth that they have seen in that segment, I mean, it's basically showing that A, the market is bigger than what you thought it was, and B, it's big enough for everybody to play here. So you're seeing growth across the spectrum in this space.
I'm just going to be digging into the segments here of Alphabet. You mentioned how we should look at other bets and other areas of growth, and we have Google's other revenues currently seeing, what is it, about 11% we see of revenue overall is made up from other revenues in terms of Google. Right. That's about $10 billion for fiscal year 2016. Right. How much does Google think that actually cloud could become the most important sector for their business?
Well, they actually think it could be as big or even bigger than the advertising business longer term. So if you look at the momentum that we have seen in the last couple of quarters, if they actually show that this growth can continue over the next couple of quarters, I mean, it'll shift the investment focus of Google in a big way, because now suddenly the story changes. It's not just about strong mobile advertising, which continues to maintain its momentum, but now there's a new revenue stream, which they are growing at a healthy clip. Now, what's interesting with Snapchat's IPO, because Snapchat is a big cloud customer for Google, right?
Yeah.
Snapchat's going on Amazon as well. So they are diversifying. So the strategy of companies starting to diversify, they are spending on different cloud services. It's positive for Microsoft, it's positive for Amazon, it's positive for Google.
Interesting you mentioned Snap there, and looking at the world of social media, we've got Twitter coming up. Perhaps not such an overexcited set of numbers coming our way this week. I'm looking at the stock price of Twitter. We're at, what, 14.71 on my Bloomberg if you're just typing in GP. We're near record lows for Twitter. Therefore, not much optimism going into these numbers?
So if you look at the expectations for this quarter, 14% revenue decline, that is the lowest it's ever been. Now, what Twitter needs to show that the stabilization in user growth that they're talking about over the last quarter, I mean, A, is that continuing? And B, is that really stemming advertisers defecting from the platform? Like, is this new competition coming from Snapchat and more from Instagram and likes of these? Is that really helping your revenue growth to maintain its position, or this is going to be a downhill battle, in a lot of ways, because if they can't meet the 14% decline expectations, because expectations are very low as it is.
I've got it on my EM at the moment.
And that would give you a signal that, they're not able to convince the advertisers.
Just looking at my Bloomberg, $508 million is how we're expecting, down 14%, as you say, for fiscal one. It's not been looking too pretty for Twitter. As ever, Jitendra.
Thank you so much.
Great conversation. Thank you very much indeed. From Bloomberg Intelligence. Now, a story we are watching for you. Delivery Hero is weighing an initial public offering as it seeks to fuel growth on rising demand. Now, the Berlin-based company, which connects customers with restaurants that deliver food through its app, saw sales grow 79% last year to $323 million. And another possible IPO in Europe, Telefonica is considering a public offering for its UK mobile phone unit, O2, as soon as the end of the year. Bloomberg sources say the Spanish telecommunications company is looking for ways to reduce debt after its sale of O2 to European rival 3 was blocked by regulators. Now, coming up, the flying car is preparing to take flight sooner than you think. More on that story next. This is Bloomberg. Now, Silicon Valley has been talking about developing flying cars for decades with little signs of progress. Remember, Founders Fund co-founder Peter Thiel famously said, "We wanted flying cars. Instead, we got 140 characters." Sorry, Twitter. But there now seems to have been some real progress. More than a dozen startups are taking on this vision, and Larry Page's Kitty Hawk is testing a flying car in Northern California. We caught up with Bloomberg Senior Executive Editor of Technology Brad Stone in Los Angeles and asked him why Larry Page is interested in flying vehicles.
Those companies were really, a little bit of a myth around Silicon Valley. Of course, we did write about them in our story last year, but today they kind of come out into the open with a story in the New York Times, a company called Kitty Hawk, a story by John Markoff. You should go look at the video if you haven't seen it. Basically shows a one-person aircraft that for now kind of hovers over water, looks sort of like a device from Star Wars. But the exciting thing here is that this science fiction dream, this idea of a personal aircraft that maybe one day we can use to commute to work, it's getting a little bit real.
I mean, it almost looks like a motorbike at the moment rather than a flying car. But what about Larry Page and Sebastian Troon, of course, who we brought over from Google of old? They're working together on Kitty Hawk.
Right, and a couple of important things in the article. One, it says this is one of a number of prototypes, so there could be other form factors. This is a single-person vehicle, so it doesn't really conform to the dream that some companies have, that these could be kind of flying autonomous taxis that take us to and from work. This looks a little bit more, at least what we saw today, like a recreational vehicle. Of course, they only fly it above water now. It's also important to know that there are so many technological and regulatory hurdles to pass before these things do come to market. But the article does say that they want to start selling these devices by the end of the year. It also sort of implied that maybe they would just allow people to sort of sign up and get a discount early. It's the first indication, though, that some of these secretive projects are beginning to realize if they're going to start talking to the government and testing it out in the open, they need to be public.
I mean, talking about getting into the open, we have a 3-day summit about to launch, pardon the pun, in Dallas. It's really driven by Uber here. It's Elevate Summit. So they're also trying to talk to regulators and thinkers and people who are just looking at the opportunities out there for flying vehicles.
Right. You might think that Uber already has its hands full with driverless cars and all of the, cultural challenges, but yes, they are putting a foot into the world of flying vehicles. They say they want to be a facilitator in this market, that they're not necessarily trying to create the aircraft themselves. We'll see. This conference is all about bringing companies together, starting to talk about what some of the obstacles will be, getting a conversation going so you start to familiarize yourself with what some of the maybe challenges will be in bringing this concept to the world. Like, look, nobody is very inherently comfortable with the idea of large, 100-pound aircraft flying right over their homes, and so there's going to be a ways to go to get people comfortable with it.
I mean, talking about thought leadership, it seems to be everywhere. We've not only had this Elevate Summit coming, but we had the Geneva Motor Show before, and this is where Europe gets its in, because Airbus, the huge engine and aircraft maker, is also looking at these flying vehicles that have vertical takeoff and landing.
Yeah, I saw that too. They showed off a very cool design concept, and it's sort of a different kind of creature here. It's almost like the classic version of the flying car, where you can drive it as a car and then presumably go to an airfield or the top of a parking garage, and boom, the wings pop out, the rotors pop out, and it becomes a flying vehicle. Very much in the prototype stage, but it does show that the big aerospace companies see this as the future and are working on it and investing in it too.
And of course, I mentioned your piece with Ashley Vance about a year ago when you were blowing open really the first thoughts of this and Larry Page's inclination towards this type of technology. But what about the other area of Kitty Hawk, which we've just seen working over over Clear Lake, California? What about Z-Aero, the other unit?
Right. This is the other. Well, it's part and parcel of the same company, all funded by Larry Page. But Z-Aero has been along for much longer than Kitty Hawk. The first records of a Z-Aero corporation date back to 2010. I'm presuming that it is working more on this kind of multi-passenger flying taxi model, where it's not just a personal aircraft, but maybe something that exists in a kind of hybrid fleet of vehicles. Maybe something that you summon in an Uber-like way. We don't know, though. Z-Aero is still operating in the dark, in the shadows, as so many of these companies are. But it's interesting that they've taken the first step here with Kitty Hawk, so maybe we'll learn more about this other effort very soon.
Bloomberg Technology Senior Executive Editor Brad Stone there. Great to have him join us. Now, coming up, IBM CEO Ginni Rometty is one of the highest paid executives in tech, and her actually pay may be much higher than what's reported. We'll discuss. And a feature we'd like to bring to your attention is our interactive TV function. You can find it at TV Go on the Bloomberg. You'll not only be able to watch us live but also see previous interviews from our coverage around the globe and dive into any of the securities or Bloomberg functions we feature. And you can become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only, though. Check it out at TV Go. This is Bloomberg. Now, in this edition of Out of This World, NASA astronaut Peggy Whitson has set a new record. Whitson officially set the US record for the most cumulative days in space, surpassing astronaut Jeff Williams' record of 534 days, according to NASA. To mark her accomplishment, President Trump offered his congratulations from the Oval Office, saying, "On behalf of our nation and, frankly, on behalf of our world, I'd like to thank you." While an impressive feat, it does fall short of the world record of days in space, which is held by a Russian cosmonaut who spent 879 days in orbit. And do not miss our in-flight interview with Peggy Whitson, who will be aboard the ISS on May 23rd. Now, IBM CEO Ginni Rometty's $33 million pay package is up for debate at the shareholders' meeting this Tuesday. Remember, Big Blue has had 5 years of falling revenue with a total return of less than 1/10 of a point under Rometty's watch as CEO. Now, the estimate by proxy advisors ISS and Bloomberg found her actual compensation may be understated by as much as half because of IBM's way of valuing stock options. Anders Mellon covers executive compensation for Bloomberg News and wrote about this particular story. He joins us from New York. Fascinating reporting. And Anders, $60 million, is that how much she could actually be getting if we look deeper into the options pricing?
Closer to 50, but it's still quite a significant premium over the 32.7 that IBM reported in the proxy filing last month. We ran the numbers at that point, and for these options, we just got a much higher value than what IBM got. And you know what? ISS actually agreed with us and said these are worth closer to 29 million.
That's quite fascinating. And actually, when you put it in perspective, Anders, I'm looking at PayGo on the Bloomberg function. She is one of the top earners already. I'm looking at, she's number 6 when it came down to the current value. She was 6th currently in the previous year. So she is very highly paid as it comes down to it. And we could start to see perhaps shareholders get a little bit angered by this, feeling she's potentially overpaid when you look at what she's actually bringing back to the shareholder base. Yeah,
so IBM is in a bit of an interesting situation now. So for the first 4 years of her tenure, shares dropped. Revenue has been sliding for the past 5 years, for 20 straight quarters. So When January 2016 rolled around and IBM's board decided to give her this grant of options, you would imagine that there had to have been some conversations in the boardroom about how are we going to sell this to shareholders, that all of a sudden her pay is going to look a lot higher than the previous year, even though shares have technically gone down for 4 years straight.
I mean, how realistic could there be a significant shareholder revolt tomorrow? Because I'm thinking to Europe, I'm thinking of WPP's Sir Martin Sorrell, and he saw about a 30% uprising against his particular pay package. It's embarrassing.
Yeah, it'll be interesting to see. IBM has had historically more than 93% approval for the past 5-6 years. And now both proxy advisory firms ISS and Glass Lewis have come out recommended that clients vote against this pay plan. That is pretty significant. Research shows that their recommendations can sway anywhere between 25 to 40% of votes. So if you have heavy hitters like Vanguard, BlackRock, and perhaps even Buffett's Berkshire vote against this plan, this could be a pretty ugly result for IBM tomorrow.
Some pretty heavy-hitting investors that they have on their list. Thank you very much. It was great reporting. Anders Mellon with Bloomberg News. Thank you for joining us. Now, coming up, SoftBank is making yet another bet, this time in the United Kingdom. We'll dive into what this could mean for SoftBank's overall portfolio. This is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. A senior U.S. military official says Russia provides weapons to the Taliban for potential use against U.S.-backed forces. Now, Russia has denied it. However, Defense Secretary Jim Mattis says the U.S. will confront Moscow to make sure it is aware of international law violations. Secretary Mattis's trip comes just hours after Afghanistan's defense minister and army chief resigned over the massacre of more than 140 Afghan troops at a military base. France's established political parties are rallying around centrist presidential candidate Emmanuel Macron, an alliance of convenience planned to keep far-right candidate Marine Le Pen from the presidency. Support also poured in from the EU, which is troubled by Le Pen's nationalistic vision. Macron and Le Pen square off May 7th. And that far-right French presidential candidate says she is temporarily stepping down as leader of the National Front Party. Today's move appears to be a way for Le Pen to embrace a wider range of potential voters ahead of that runoff. Weeks of political unrest and protests in Venezuela have claimed another victim. Officials say a woman died Sunday after being struck in the head with a frozen water bottle. At least 21 people have been killed since the demonstrations against President Maduro began 1 month ago. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti, and this is Bloomberg. Just after 5:30 p.m. Monday here in New York already. Tuesday morning, 7:30 a.m. in Sydney. I'm joined by Bloomberg's Paul Allen. He has a look at the markets. Good morning, Paul.
Good morning, Elisa. Well, markets in Australia and New Zealand will be closed today to observe Anzac Day, but the rest of the region will be trading as normal. If we take a look at Nikkei futures trading out of Singapore are weaker, but futures traded out of Chicago are showing some strength. So a mixed picture there for the Nikkei. The market there waiting on PPI services numbers for March. The estimates are to show a slight contraction to 0.7% year on year. Meanwhile, the People's Bank of China Deputy Governor Li Gang has been speaking at Bloomberg headquarters in New York. He says China's bad loans and capital outflows are stabilizing and the country will gradually look at opening up onshore equity markets. Plenty of earnings out of the region today as well, particularly out of China. We're waiting on SK Hynix, the Aluminium Corp of China, and CITIC Bank will also be reporting later today. That's just some of what we're watching around the region. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Caroline Hyde. And SoftBank is close to making its next big investment. The Japanese conglomerate is said to be planning an investment in Improbable. Now, that's the London-based virtual reality startup backed by US venture capitalist Andreessen Horowitz. That's according to people familiar with the matter. The investment is part of SoftBank founder Masayoshi Son's vision to establish the company at the forefront of the technology sector. SoftBank is currently finalizing the $100 billion Vision Fund, with backers including Apple and Saudi Arabia. Now, joining us now to discuss from New York is Bloomberg Technology's Selena Wang. And first of all, talk to us a little bit about this UK startup that has Andreessen Horowitz already on its investor base. What does SoftBank see in Improbable?
This UK startup very much fits into Masayoshi Son's stated goal of seeing this AI-driven and robot-driven world. This is a really interesting startup. It's raised about $20 million, led by Andreessen Horowitz. They basically make computer software that allows developers to make hyper-realistic virtual worlds. So a lot of gaming companies are capitalizing on this, making infinite sorts of realities, but you can also imagine a lot of real-world applications for this. For instance, visualizing a future of autonomous cars, and they also recently worked with the UK government to build a simulation of the entire internet. It's also been growing very quickly. It's opened a San Francisco office. It also has a joint venture with Google's Clouds business. So it's not surprising at all that Masayoshi Son would be interested in this startup.
I mean, paint a picture for us, if you will, of what Masa has got his fingers in terms of pies, because I'm thinking of Arm Holdings that they bought. That's when you're looking at chip designs. I'm thinking of Sprint here in the United States. He's got all sorts of manner of investments.
Definitely. He has a very solid stated thesis of an AI robot-driven world, of a future of singularity and computers overtaking human intelligence. So we have a number of investments that really fit into that thesis, like ARM chips, as well as this startup. And OneWeb is a satellite company they invested in the United States that is trying to bring internet to more underdeveloped areas. And then he also has a slew of other investments that are maybe a little bit more surprising. Our sources told us that he was making an investment into WeWork in this Vision Fund, which is a little bit out of the normal for a very tech-driven one. It's however, has grown extremely rapidly. It leases out rental locations to people looking for temporary workspace. And that is a business that does rely on the growth of startups and tech, so he definitely wants to be in high-flying startups. He also invested in Social Finance, a fintech startup in the U.S. And other investments also include Fortress Investment Group, which he invested in quite recently, which was also a big surprise. This is a PE fund.
Yeah, such a spread he really has. And of course, SoFi, Social Finance, being a company you report on very well, Selena. I'm just going to bend you while I'm here, because I know you've been putting out some great reporting on another fintech company that you cover, and it's Square. And interestingly, it looks as though they're doing a bit of an acqui-hire from perhaps a slightly more surprising place.
Definitely. This is really a story that kind of tells the arc of the rapid rise of startups in Silicon Valley and how they can crash just as fast. This startup, Yik Yak, made this anonymous social networking community. It really took off on college campuses where you can make anonymous social groups to talk about various things with people in a certain radius of you geographically. It rose to a valuation of $400 million with backing by some of the hottest Silicon Valley venture firms. And now it's sold for less than $3 million. Now, it's not the actual company that's being sold. Square isn't interested in the IP or the technology. They're really interested in this small group of engineers that built a lot of these innovative technologies at Yik Yak.
I mean, it's fascinating because Yik Yak almost feels like it would fit rather better with Jack Dorsey's other company, being Twitter, rather than working with Square. Do we know what sort of areas Square's trying to look into with its building up its engineering portfolio?
I think that this technology team is going to be used to build some of their existing technology products. Yik Yak's product, while very innovative, came under a lot of fire because this anonymous social networking group really just didn't hold people accountable. So there were a lot of incidents of threats, harassment, racism that was appearing on this anonymous platform, and there was a lot of pushback from various women's groups and civil rights groups about actually trying to ban this on campuses across the country. So this social networking bit is not going to be put into Square, but obviously a very talented engineering team there that Square wants to take advantage of as they move into areas like loans and food delivery and more software services.
Yeah, more diversification coming from Square. Great reporting across both SoftBank and Square. Bloomberg Technology's Selena Wang, thank you very much indeed for joining us. Now, Amazon may be diving into driverless cars, another one. The tech giant has reportedly formed a team that is dedicated to developing self-driving technologies well beyond the realm of cars. That's according to the Wall Street Journal. Now, at least 12 employees were assigned to the group more than a year ago to examine how driverless vehicles could help Amazon deliver packages more quickly. This isn't the first time we've heard Amazon could make a play in the autonomous driving sector. Earlier this year, Amazon was approved for a patent for a roadway management system that helps self-driving vehicles find the best lanes for their driving needs. Talking of cars, Tesla is anticipating its growing electric fleet, planning to double the number of superchargers available to the public to 10,000. Now that's 39% more than Elon Musk promised when he unveiled the Model 3 electric car. Tesla will also increase its so-called destination chargers. Now they're located at hotels and restaurants from 9,000 to 15,000 in number. The company plans to make 500,000 electric vehicles next year, up from 76,000 just a year ago. Joining us now for more is Bloomberg's Dana Hull. And is this really the significance of this play for electric chargers? Because they're about to increase their fleet so stupendously.
Yeah, well, I think one of the big questions for potential consumers who might be interested in a Model 3 is, where am I going to charge this? Particularly if I live in San Francisco in an apartment and I don't have a home garage. And so having a network of chargers really makes it easier for people to consider buying them, particularly since they're going to become so ubiquitous.
There's a map that really shows how much they're going to be increased. The red is where they already exist. The grey are coming soon. Cities seems to be where it's at.
Yeah, I think what you're seeing is that, by and large, the people that have reserved the Model 3 tend to skew more young and urban. Many of these people live in apartments or condos, or they're renters. They don't necessarily own their home, so they can't do a home charger in the garage. They need a place to charge. And so while the supercharger network originally was largely on highways, now they're becoming more dense. And I think they just want to make it very easy for people to charge without thinking about it. You should be able to drive from San Francisco to LA without blinking twice, and to be able to charge in the city center if you're there for a meeting or for business.
Talking of potentially where you can get chargers, destination chargers are an important one. We were just talking about where they might be located. They're being boosted too.
Yeah, destination chargers are fascinating. They are located at hotels, wineries. I mean, there's one in Yosemite at the Ahwahnee Hotel. So I think that what Tesla has discovered is that its consumer base really like to drive. I mean, these are people who love to do long road trips to the Earth's most beautiful places. And the one challenge is, if I go to Glacier National Park or Yosemite or Yellowstone, am I going to be able to charge when I get there? Now the resorts are catching on to the fact that if they offer charging as an amenity, it's a great way to kind of get Tesla customers in the door. And so you're seeing a lot of bed and breakfasts as well as high-end hotels like the Four Seasons offering charging as an amenity to their customers.
Yeah, this does seem to be experiential. I was just in Napa and they had so many various different restaurants. I'm interested by the focus on the United States here, and really at the moment that seems to be the hottest place that Teslas sell.
Yeah, and I think that makes sense because Tesla has said that when the Model 3 comes out, they will begin deliveries in the U.S. and then go abroad. They will start in California and then move to the East Coast. So they're adding charging where they expect to begin the deliveries first. But to be clear, there are superchargers all over the world as well as destination chargers. If you look at the map of China, there's like an astonishing number of destination chargers in China as well.
Fascinating, meeting of minds and meeting of purchasers. Great reporting as ever. Thanks very much for coming on and explaining it all to us. Dana Hull. Now coming up, T-Mobile out with earnings, picking up more subscribers to gain ground on rivals like Verizon and AT&T. We'll speak with CEO John Legere next. This is Bloomberg. Now, T-Mobile has set a high bar and cleared it again, picking up more subscribers to gain ground on rivals such as Verizon and AT&T. Now, the US carrier signed more than 900,000 new customers in the first quarter, showing some serious growth. T-Mobile's net income rose to $698 million last quarter from $479 million a year ago. We're joined now by T-Mobile President and CEO John Legere. John, great to have you on Bloomberg Technology. Talk to me about these numbers. You've lifted your guidance on net additions, double-digit revenue growth, but perhaps profit not increasing at quite the same sort of pace as revenue. Will it start to?
Well, let's be clear. Our 4-year-old birthday is on May 1st, since we became a public company, and 16 quarters in a row, we've added more than 1 million customers. So we're highly consistent. We added 1.142 million net additions. 914,000 of them were postpaid net adds, and 798,000 of those were postpaid phone subscribers. And here's the piece that's interesting. We estimate that we took over 250% of all the growth in the industry this quarter. So a gigantic percentage of the gains, 386,000 prepaid nets, and churn at a record low of 1.18. Now, as you said, revenue, service revenue and total revenue grew 11%, adjusted EBITDA normalized grew 21%, and 46% net income. You have to remember, too, that that's in an industry where no other carrier grows service revenue at all and hasn't for several years. So we are thrilled with the announcement of the earnings today, along with a gigantic win in the low-band spectrum auction. So it sets things up beautifully.
You talk to us about that $8 billion that you're splashing on spectrum. How will it be put to work?
Well, it was a historic low-band spectrum auction, 600 megahertz moving from the broadcasters over, and it was a 1-year-long process. We won 45% of all the spectrum in the auction. We got 31 megahertz of low-band spectrum, and we increased our overall spectrum holdings by 39%. We now have 3 times as much low-band spectrum per postpaid customer as Verizon does. So it was important for us. The spectrum we got covers every single inch of the United States and Puerto Rico. And it's that beachfront spectrum that goes in buildings and covers rural areas. What we're already doing is we're growing our retail footprint by 30 to 40 million people to use this spectrum to take the competition, which up until now was only in 2/3 of the country, to every inch. And it's historic and very exciting for us.
Does it make you even more valuable, do you think? We've got to talk about consolidation. You talked about it in January, saying that you see 2017 perhaps as a year of consolidation, horizontally, vertically. Are you going to be a player in that?
Yep. Yeah, now, the anti-collusion period associated with the auction ends on the 27th, which is Thursday at 6 p.m. So I can't comment specifically on any of these. What is important for everybody to understand where all this hype is coming from, that there are great opportunities for wireless players in adjacent industries to bring capabilities together to serve customers in a better way and increase value. Number 2, nobody's been able to talk to each other for over a year. Number 3, there's an expectation that the new administration will be more lenient from a regulatory standpoint. And you've got 3 or 4 people who have admitted they need to do something. Dish, Sprint, Comcast, etc. T-Mobile now, from a strong position, much more valuable. We have the opportunity to continue to grow, but we also, on behalf of our shareholders and customers, will be interested in looking at the opportunities that we might further accelerate that growth and serve customers better.
Do you think you could serve customers and shareholders better with a horizontal deal? Would it be better to team with other mobile suppliers, or do you think it's better to get into the content?
Well, yes, yes, and yes, right? I mean, I've often said that what is happening, easily summarized as all content will go to the internet and all internet will be viewed mobile, can define where things are going and what structures will take place. T-Mobile could be very strong by itself and continue to grow. We could consolidate with another wireless player and get scale and bring competition even greater. We could come together with a cable player from a standpoint of a convergence that makes sense over time. And remember, when all content goes to the internet and the internet's viewed mobile, we have 73 million and growing people who get their monthly access to the internet and content from T-Mobile. So I think there's going to be a lot of fascinating things happening. Most importantly is we're strong, we're profitable, and we've given 45 to 48% 3-year CAGR on free cash flow growth. And our stock was trading at an all-time high today. So we feel very good about all options.
Yeah, stock just dipping a little bit after your numbers, down only a percentage point. As you say, we're at heady highs when we come to that particular number. But what about future profitability, and what about competition? You have done so much to disrupt in a player in a field of four, but they're copying you. How can you say that your average revenue per user will remain stable and you will keep on adding more users?
Okay, because we are the competition. And you say they're following. We are dragging them kicking and screaming on behalf of the consumer. 4 years ago, when T-Mobile became a public company, we announced that we are going to fix a stupid, broken, arrogant industry on behalf of consumers. And I also would point out that the 13 Un-carrier moves we've done they're industry changes, they're permanent, and there's more coming. There's so much more to do. And we want the industry to change and follow, so it creates to our brand. We'll have stable ARPU, but there's much, much more change to come, and our competitors know it, and they're struggling to keep up with us.
John, I have to say, I love going back over your 2017 predictions, and one of them was Verizon will consider a merger with Comcast. You're bang on. You say Google will enter wireless. And lastly, a fun one, your cookery show. You say you'll get 1 million people watching you. How's it going on a Sunday?
You know what? My cooking show is the easiest one of all. I'm getting about 750,000 viewers a week. I have as many people that stop me on the street to talk about my cooking show as do wireless customers. And by the way, I make one slight change. I did say that it's possible that the two most hated corporations in the world, Verizon and Comcast, could get together, and it may be called Veracast. But I think Verizon's dying so quickly, it might be called Comheisen. So, we'll have to see. But it's all in good fun, but there's an underlying reality to each of these things.
Eisen, we're going to be keeping an eye on those predictions and how they come out for the rest of 2017. T-Mobile President and CEO John Legere, a joy to have you on. Thank you very much indeed. Now, a story we're watching out of Asia for you now. Sony shares jumping the most in almost 3 months after the company's better-than-projected preliminary earnings. Now, analysts expect profit to top $4.5 billion, its highest level since 1998. Coming up, traditional retail has been suffering from the rise in e-commerce, but one company is bringing on some clever high-tech features to improve the in-store experience. Details just ahead. This is Bloomberg. Now, with connected clothes rails and smart mirrors, online luxury retailer Farfetch believes it has created the store of the future. Using the latest software and hardware, the retailer aims to help luxury brands gather more information on customers in stores and online. Now, Bloomberg went to London's Design Museum, where the tech was showcased, to take a sneak peek at what's in store.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store with customers, touch and feel products? And we created a concept called the connected rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Shopping that a little bit too easy. That was Bloomberg Technology team reporting from London. Now that does it for this edition of Bloomberg Technology Tuesday. Tune in for our SAP CFO interview. This is Bloomberg.